The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and lovely to have you with us. And good morning to our friends in Australia, and good afternoon to our friends in New Zealand. Daylight saving continues to wreak havoc everywhere. Mr. Deck, thanks, mate. Sound is great, says Deck. So I guess you can all hear me, which is grand. And welcome. Lovely to have you with us. Exciting times at the moment, folks. I love the way that all the equity indices are getting themselves in a knot and not correlating at all. That's usually a sign that markets are not terribly happy with their lives. So anyway, welcome, Alan. Alan Varian, my friend from Brisbane. Alex, Andrew, Tony. Yes, all the usual friends here. Chase is with us. He'll growl at me for lighting cigarettes. Daryl Coe over in Mossman. Daryl, how are you, mate? I hope things are going better for you than the last time I had contact from you. Don Maydell up in Canada. Johnny Barnes also in Canada. We've got a ton of members up in Canada. Justin down there in the Hunter Valley around Singleton. Good to have you with us. I hope you got Hank with you, my friend Marcel, up in Canada as well. Mark Lutt's doing a video tutorial at the moment. You'll enjoy this. Lovely Marilyn's with us. Mike's done a video tutorial. Ned, no, Norbert, I wrote to you the other day. I'd misplaced your email for a few weeks, Norbert. We got caught in a spam filter somewhere, but I've dealt with that now. Let me know what I can do to help you. Pierre, nice to have you with us. Rob H over in New Zealand, my mate. Steve's a video tutorial guy. And Tom Janovic over in Florida. Good to have you with us, Tom. I hope you're sucking all this stuff in, mate, because the world is your oyster once you know how to trade. And the lovely Sue Lee is with us. Sue, nice to have you with us. Thank you for being with us, folks. Welcome. I've titled this webinar today, "Lose the Newsfeed and Watch the Charts." And I hope that during the course of today, I'm going to prove to you that everything you need to know is actually in the charts, and the news feeds are a bit of fun, but they don't really help you with your trading. And I wanted to tell you about our tutorials for the end of the year. We're not having the tutorial at Waiheke Island, which we've had for the last 2 years. And 90% of the people who've want to do a tutorial now want to do the video version. And that's kind of interesting. I know it's a very long way from Europe and the States to come all the way out here. I make that trip myself, and yeah, it's a killer. But anyway, better than 90% of the people who've already registered for the tutorial wanted to do the video version. Now, we've been doing these video tutorials only for 18 months, and they've been immensely successful. And we've had quite a number of our video tutorial guys are looking to be very, very good traders. And Lockie may not be able to re-enter the USA. Yeah, all sorts of problems with travel. Anyway, long and the short of it is almost all of the people who are interested in the tutorial have asked to do it by video. For those of you who don't know, this is how it works. We have 12 hours of one-on-one video conferencing with me using GoToMeeting, which is the same as this GoToWebinar. As you know, it's just a slightly different version. And we start off with 4 by 2 hour sessions. We can talk to each other. You can see the screens. You can see my screens. I can see your screens when I want to. And then after those 8 hours of training, where we teach you everything from trading price to trading and creating time signals, moonbeams, fourth seal, fifth seal, forecasting, all of the magic stuff. We then have 4 by 1 hour follow-up sessions spread over 2 week intervals, fortnightly intervals. which gives me a chance to monitor how you're progressing, and I have a look at how your trading's been going. And what I ask you to do in that period is to trade a sim account, a simulated account, a paper account, if you like, and I can then review those trades with you and see if you've got it. You know, the message I'm always pounding at our tutorial people is, for goodness sakes, do this on a sim account until you can produce the results, and only then should you risk real money. It's very, very easy to lose money at trading unless you know exactly what you're doing, and I don't like to see that. That's just unnecessary and stupid. With these video sessions, they're all recorded, and they go onto one of our secure servers, and you can review them as often as you like. And I think that might be a very, very good teaching technique. I know folks just pound those videos again and again. Mark, I hope you've been knocking the socks off the ones you've got so far, because this stuff is different. Danielcode is it's a different way of thinking. It's entirely logical. It's all mathematical, but it is counterintuitive to our normal ways of thinking. And what we've got to do with you during these tutorials is train your brain so that you can. Hello, Tony, over up in Chicago. Good to have you with us, mate. We've got to train your brain so that you can see charts and markets in a different way. And that's having these sessions recorded for you, and you being able to go over them at your own time, your own speed, as often as you like. Seems to be a very, very big thing now. I'm going to be doing these video tutorials from pretty well now until December the 9th, and that's the only times they'll be available. And if you're interested, please email me, jneedham@thedanielcode.com. Let me know you're interested. I will send you the 2016 video tutorial syllabus, which is the same as the normal syllabus for our live tutorials, and we'll book you in. We need basically 4 consecutive days where you can make 10 hours available. Given that the time zones we're on, it needs to be between 6 o'clock and 6 p.m. and almost any time in the US Eastern Time, which equates to about 6 o'clock in the morning until any afternoon time for me. So if you're interested in this, folks, we need to get you registered because they're very time consuming for me, so I don't do them all the time. But I've committed to doing these until December the 9th. So please shoot me an email if you're interested, and we can take it from there. jneedham@thedanielcode.com. Let's have a look what we've got here. Let's move on. The theme of this thing was lose your news feeds. I know some of you spend an awful lot of time worrying about the news and what's happening, and your belief that news is what makes markets move. And I've told you many times before, it actually doesn't. News actually follows the chart. So this chart I'm showing you now is dollar CAD, Canadian dollar, called the Loonie. Not sure why. We've got a lot of Canadian friends. Someone will probably tell me. Is that a bird that you have? Is that the bird on your currency? Is that the loon? Anyway, that's what it's called. And this caused quite a lot of excitement. This was the Monday, the day the Bank of Canada met, the Canadian equivalent of the Fed and the Australian Reserve and what have you. And the announcement by the governor was that nothing, zero, no action. They're not going to do anything. They're happy with their present settings, and they're just not going to do anything. But that, have a look at it, caused a 116 tick drop in the Canadian against the dollar. And a lot of the websites were excited by the fact that they're really short-term traders. Don't forget, some of these folks are trading on 3-tick charts and 1-minute charts and even faster. And to them, this is the end of the world. But in fact, it meant very, very little. Let's switch now when your charts change. I'm now showing you the daily chart. This is the sort of stuff we trade. This is the US dollar Canadian dollar daily chart. And you can see I put a couple of notations on here for you because I want to just illustrate to you, if I can, in a reasonably subtle way, what you're missing with your trading if you haven't done a Danielcode tutorial. One of the big things that I teach you at the tutorials are a few proprietary methods to determine trend. And if we can determine trend before others can see it in a reliable way, that gives us the opportunity to hold trades for much longer. You'll see here that you just cast your eye over these charts, these sort of 5, 6, 7, 8 bar runs that you get. That's where you make the money, and I'm going to show you some more examples of this. But for most of you, unless you've done a DC tutorial, you don't know when to hold your trades and when to exit first profitable close. The Danielcode website, in case this causes confusion, is actually optimized for defense. In other words, we have a lot of people coming to us who are very new traders, and so we usually are urging people to exit first profitable close on the basis that if you don't know how to trade, that is the safest way to get started. But for those of you that have done tutorials, I teach you when it is time to hold your trades and when it's time to be exiting or be more aggressive with your stop loss management. And you can see on here I've put on 3 notations. 2 of them are in blue and says start staircase. The other one says failed waterfall. These are trend signals. They're one of 3 types of trend signals that I teach you. And when we have these trend signals in place, it doesn't mean the end of the world is coming or that we're going on a moonshot, but it does mean that we expect a larger than usual move. And you can see in this sequence that starts in late September, we start with this staircase, which usually tells us that a staircase is the opposite of the waterfall. Waterfalls are down, staircases are up. It's called a staircase because Sister Sage named it that the first time I was teaching this, so that's what we call it. Seems pretty logical to me. And we have 2 on this chart since late September. We have 2 blue staircase signals showing the dominant trend is up, and we also have a failed waterfall signal, which was the initial signal of a change of trend to down, and that signal failed, which tells you that what's lurking in the bowels of this monster is a very, very strong upward trend. And if we go a little bit further on this, this is the same chart. And what I've shown you here are not just the Danielcode website signals, which are all based almost exclusively on price, but I've added to these the Danielcode time signals, which you don't see unless you've learned how to create them at a tutorial. And you can see, they're pretty well perfect. Every high, every low. We've got 10 time or price signals in this period. And then we've had to add to them to make this work. We've had to be aware of 2 trading techniques that have allowed us to get back with the trend when we've had false signals. And one of the false signals was this sell signal that came off Monday's Bank of Canada meeting with this currency. We had a sell signal for that day. Yes, the market fell 110 points or so, but no trade was elected. But next day the trade was elected and almost immediately failed. So we need to know what are the rules to get us back in with the trend. And you can see that's happened twice on this chart since mid to late September. And all of the other trades have been winners. Let's have a look at copper. I'm showing you the same thing here because this is some of the stuff that you'll learn at tutorials. I'm showing you how the TT buys, TT sells, their time turns, Danielcode time turn signals. They're completely separate to the price signals. They sometimes coincide with the signals you see at the website. At other times, they are standalone signals. But as you can see, here's copper. Pretty well, this starts from early October. Pretty well every turn in this market, in fact, every turn in this market has come off a Danielcode time turn or one of our website signals, blue line TO3 or the plus suite of signals. And there's a lot of money in this sort of trading. This is how I'll teach you to trade at a tutorial. The point here, I put these big colored triangles on the chart, is to show you where the major trend is at this time. Working from the left, we have a TT sell signal. 2 days later, we get the confirmation of the start of a waterfall signal, and that downtrend stays in force all the way through until you see the blue starts staircase signal, which is telling us that there's a change of trend and the trend is up. So during trends, if we can identify these market trends, we hold our trades, make a whole lot more money than trading just for first profitable close. Over at this point at the side here, I'll just get my highlighter. Spotlight, I think it's called. Here it is. By the time we get here, let's see, this is copper, HG. That particular bar that we're interested in is 1025, is that bar. And we've been long at that stage for 1, 2, 3 days without much happening until the third day. And it's the third day from that plus buy signal that gives us the standard exit, which is first profitable close. But that chart, that bar, is showing us also much, much more. It's actually showing us that a staircase has started, which means that we will be looking for much higher prices, or at the very least, we will be prosecuting the buy side of this move quite rigorously. Okay, let's move on, show you a bit more of this. I'll have to lose my highlighter, go back to normal before we can change up. And here we are, and this is the same chart, and here's the lovely lolly. And those of you who don't know Needham speak, lolly is the money. It's an old racing expression, you know, where's the lovely lolly? And this shows you this same chart you just saw, but I put some dollars on it. And there's, you know, this is the sort of typical trading you have when you're in the market all the time. And that's what I teach you. We all have our own particular biases about trading. My particular bias is, you know, most people say, oh, it's outside bars. I hate outside bars. Or we've got a lot of people say, I don't like holding trades overnight. Everyone's got their own little fears and perks and peculiarities. And I'm not immune from that. But my particular foible is I hate being out of the market and missing a big move. And seeing as we don't really know when these big moves are coming, we can get pretty close to it with our trend change signals, but they're not infallible. So over the years, I've developed this style of being in the market all the time. And I'm, you know, I trade a lot of markets, and I want to be in the markets almost all the time, in the belief that if we know how to trade, if we can actually read these signals simply and promptly, you'll always be with the trend. And markets, even when they're not doing much, will, with one or two exceptions to that, perhaps, markets will always have enough volatility to reward those who know what they're doing. And here you can see in this series of trades here, we've had 1, 2, 3, 4 winning trades and a losing trade. That's pretty standard. On the losing trade, we can say I was right and I lost money. And that's one of my themes, that we need to be correct in our method of trading. We need to be able to see the signals that others don't see. This is just the real shortcut version I'm giving you, folks. When you look at these charts with the Danielcode numbers on them, as I've shown you before, you'll see all of these signals come exactly, or very nearly exactly, at Danielcode numbers. But that's the theory. And then if you trade a number of markets, you will find that there is always some markets there to reward you. Recently, we've had a number of markets that are really in the doldrums. I'm going to show you those later on. Gold is one of them, and which I know is of interest to many of you, and also anything to do with the British pound. And that's pretty much standard fare. I can show you any number of charts where you have big moves, big sell-offs, and the market then sort of gets a bit stunned, and it takes quite a long period to consolidate its, recover its mojo, and get ready to go again. So we need to have a simple way of identifying those markets, because when markets get in that state, whatever you do will be wrong, because the markets just don't move far enough away to give you a profitable exit. And the reality is you will probably have had 2 or maybe even 3 losing trades in that market before there's enough bars on the chart for you to identify that they have entered that somnolent position. But if you're trading a number of different markets, there will always be some that are rewarding you. Let's have a look. This is coffee. This is much the same sort of thing. And in this case, the buy and sell signals from the Danielcode website have all matched the TT buys, TT sells, which are the time turn buys and time turn sells. But you can see this is a pretty simple sort of a deal. You had a buy. Let's see, get my other chart up here so I can give you a date. And this little blast up starts back here on October the 7th, where you had a TO3 buy, and that was also a time turn buy when that trade was elected. And then the very next day, excuse me, we got the signal that that was a start of a staircase. So we were able to prosecute this trade to the upside by holding this trade with appropriate stop loss techniques. Up it went, ran up nicely for us, very simple trading this, until October the 18th, when we had a blue line and a TO3 sell signal and a Danielcode time turn sell. But look where this is happening. It's happening in the middle of a confirmed uptrend. And this trade failed. It didn't cost us much, 130 bucks, but it did fail. There was a better way of trading that would have actually made a profit. That's the sort of thing, even though it's a counter trend, there are ways of trading to make a profit. And then as it moved through here, and we got to this little turkey here, which says TT buy, that was 10.21, and there was a plus buy signal on that. If you don't subscribe to the TO3 Plus program, you probably didn't see it, but that was a plus buy signal and a Danielcode time turn buy, and that next run up from there gave us 2,100 in the next 3 days before right at the end of this chart. You can see we had a sell signal up here. Again, a sell signal into a dominant uptrend. It failed. No great surprise there. It was a blue line and a TO3 sell, and it failed, and that's actually an outside bar. It should be in grey for you, but that was the start of the end of day download, and poof, it blew my charts into some totally different pattern, but it got rid of my red inside bars and my grey outside bars. But if you have an outside bar, you must take the stop and reverse. Now, I know some of you can't because you put on your orders and go to work, and that's great. But you should at least be aware that as your trading improves and as your time commitments improve, you must be aware that on outside bars you must take the stop and reverse. And that bit of trading there, folks, pretty simple. Gave us about $4,000 in profit on 4 trades, and the margin of that market is $3,100. So you've made 110, 120% on margin in 14 trading days. That's the sort of trading you can do once you've been to a tutorial. And, you know, if there's anything in life that I'm frustrated about, is that this stuff is available here at the Danielcode, and a lot of you take advantage of it, but not enough. And I'd really like to get all of you to do a tutorial for your own benefit. Sure, you pay me a fee. You may not be in a position at the moment to do that, but at least be aware that this sort of trading is not only possible, it's going on all the time. I'm just showing you current examples that we've been running through for the last couple of weeks, and you can do this. It's all available to you. Okay, and with the video tutorials, you don't even have to get on a plane. This is a fairly complex trade I want to show you. It's very interesting, if it will stop jumping around. This is natural gas, folks, and there are 2 charts here. They're actually of the same market. The chart on the left is the Trade Navigator's 057 chart. That's the continuous chart, and you can see there's a big green stripe on that with an arrow leading up to it saying contract rollover. And that's what happened at rollover of this market, which was on October the 20th, Thursday, last Thursday. So the next chart, what they call the far month, the chart that's the present month trading, we call that the front month. The next month, the one that's coming up, is called the far month. The one that's present, the front month, is also called the near month. But the far chart, the next month, was trading at a very, very substantial premium to the current chart. In other words, if you go back 1 bar from that arrow, you see that little down bar. That's the 2000. That's the November 2016 contract. Which rolled over, that is the volume, went into the next month, which is the December contract, and that happened on Thursday, October the 20th. And because there was a premium in the far month, you saw this massive, great big gap up if you were on the 057 contract. But the point is, you shouldn't have been on the 057 contract. You should have been aware that rollover's coming on. Trade Navigator puts this little blue R for rollover in a diamond. It puts that icon on the 057 charts days and sometimes weeks before rollover, and that's the estimated rollover date. And if you have a look at the chart on the right, that is the 2012 contract, and it just looks entirely different. And of course, that's the one you have to trade. If you're coming up to rollover, you need to be out of the contract and into the next month, preferably 2 or 3 days before rollover. And rollover, in this case, looking at the December contract, you can see that that big outside bar just before rollover was this market's attempt to measure out the premium that was in the forward month. But let's have a look at how you could have traded this. These are the same sort of pictures and colors that you've seen on the other charts. And this started back here on, let's have a look, this is where this is. Let me get up this contract. Now I'm showing you this on the December contract. And there's the reversal bar. That is the start of this is October the 3rd. Now, this is not quite correct because for most of this run up you were trading the previous month and then switching 2 or 3 days before rollover. But these were the signals that were available to you. We had a TO3 buy for October the 3rd, and off it went, 1 day up, 2 days up. By the time you took out the high of the day it was elected, in other words, by the time you got halfway through October the 5th, you had signals for the start of a staircase, which is telling you we expect a change of trend to up. We have a change of trend to up, but we expect it to be a bigger than usual move, which means we're going to prosecute these trades to the upside until we get a new signal for a change of trend. So this market ran up all the way until October the 11th, which is up in here. And for the next day, we had a TO3 sell signal against the trend. Doesn't mean we don't take them. We have to take them. But we need to be aware if it's against the trend, there are all sorts of stop loss techniques we can do to reflect the fact that there's a heightened risk of that trade failing. And then we have a time buy signal straight after that to get back long, which we do on 10.13. Up it goes into the highs, and at that high we have a blue line sell signal, and that's when we had rollover. So I put another signal up 2 days later for those of you who got yourselves confused about what was happening with the rollover. This downside trade looks so promising. I put up a separate TO3 sell signal 2 days later to make sure you didn't miss it. It might look rather unconventional as a sell signal because that's not normally where TO3 sells appear, but I want to make sure that you all got that trade. And of course, the day that trade's elected, which is this very next day, 10.19, we get a change of trend, and of the 3 ways we measure trend, all 3 of them told us we had the high probability of a change of trend. Now, remember that whenever we talk about trading, we're talking about probabilities. That's what we're talking about. There are no certainties in trading. And when we look at these questions of what's the trend, are we going to hold this trade or are we not going to hold this trade, we're talking about probabilities. But when you get good at this stuff, and I'll teach you to be good, the probabilities come so overwhelmingly on your side that you can make an awful lot of money, which itself is great fun, gets rid of all the anxiety of life, and better to be rich and happy than poor and happy. Okay, so there at that when that trade was elected on 10.19, the website would say exit first profitable close. Yes, and it was a nice trade. If you did exit first profitable close, that's great. If you're a tutorial guy or gal, you should have known that we had a high probability of a change of trend, and you would have held that trade with the appropriate stop loss protocols, and it's just gone down and down and down, and it's giving you over $4,000 per one contract. Now, bear in mind, this contract has a very small margin. It's only $2,500 for the full-size contract, and there is, in fact, a mini contract in natural gas that you can trade for about $250 margin, I believe. And you can see here that of these 4 trades I've shown you, all of which were on the Danielcode website, and all of which came on DC time cycle signals, you made some part of 6,300 from 4 trades, and you had the one little losing trade in the counter trend trade back here, which was 10.12. That's this fellow here. But if you had known how to manage your stops when you have a counter trend into a strong trending market, you could have got out of that with no loss. So 6,300 from 4 trades on 2,500 margin. Have I cherry-picked these? I've cherry-picked this one because it's a fairly easy trade. but I've also shown you a couple of other markets that are very normal, about 80% win. Sometimes if markets are not moving, I've said to some of my clients before, trading seems often to be like offshore ocean racing, which is my passion, that 90% of it's sheer boredom followed by 10% of exhilaration and terror. And that's what happens with big boats when the wind starts blowing. And trading's like that. You have long periods, and the market's just not moving much. It's up a bit, it's down a bit. You're managing your stops, you're being aggressive with your stops. You feel like you're fighting the fight every day, and then you get something like this with natural gas, that you get these perfect signals, 1, 2, 3, 4, 5, 6, 7, 8, 8 or 9 days down, and $4,000 odd jumps into your equity curve. And that's what trading's about. You have to know how to handle the battles, the fights, to be there and get the benefit of these gifts that the market gives you, usually when it's got everyone else wrong. And you'll see there's an enormous propensity for markets to do trend changes at the time of contract rollovers or options expirations. So that was natural gas. Very nice. It's just been an enormous couple of weeks trading. It's just been quite wonderful. I hope you've shared in all that goodness. And I've given you a couple of things here for thought. I told you a bit earlier on that these markets sometimes get into a pattern where they're not trading markets. This goes to the question of market selection, what we're looking for. In our market selection, we want markets to move up and down. We want to see some movement so that our signals can at least get to the first profitable close, if nothing else. When you've had big moves in markets, they tend to do this sort of long sideways consolidation. This is one of the British pound pairs. They've all been shocked. This is post-Brexit. And they just, all of them are pretty much rolling along sideways. So there are buy and sell signals in here, but there's actually only one buy signal. There's one sell and one buy that have moved far enough to give you a profit. And when you see this sort of thing happening, just stand aside from that market. It'll come back. Wait for it to break out. You know, a lot of people have this idea, I don't want to miss the breakout. I don't want to miss the trade. Don't worry about it. We've got lots and lots of markets. We cover, I don't know, 15 or 16 futures markets, and about the same in Forex at the Danielcode. And that's not the exclusive list by a long way. There's lots of other very good markets to trade. Markets will always be here. Some of them will always be showing sufficient volatility to reward you. Markets exist for the purpose of transferring wealth from people who don't know how to trade to those who do know how to trade. Now, I really, really suggest that you think hard about doing the Danielcode video session in this next 6 weeks or so. I don't know when I'll be doing them again, and I would really like as many of you as possible to get these skills so you know you can create not only your own price signals but your Danielcode time signals. And you can create your own trade, and you know when to hold them and when not to. This is gold. You can see it's had the same sort of pattern. It's had a bit of a rundown. Not that extreme, really. I just thought it's pretty benign, but it's obviously got a bit shocked, and it's having these blocks of just sideways trading now. There's two winning sell-side trades in there, and there's there's 3 winning buy-side trades in there. But this sort of pattern, when these markets are just working along through the same old range, they're not great trading opportunities. There are better trading opportunities elsewhere. And to finalize the slideshow part of this, I wanted to just draw your attention, something I've been talking about this for a long time. Real estate prices. We've had this extraordinary phenomenon pretty well worldwide, in the Western world at least, of these extraordinary price escalations in housing. What's driving that is really the modern phenomenon of women working. It's the change from one-income families to two-income families. So people of my generation, or my era at least, the norm was, when you got married, the wife stopped working, looked after the house, presumably the children, was a hostess for your clients, etc., etc. And all of that's gone. Now almost all these families are two-income families. And I saw this happening at the time, and I was staggered that the standard housing price has pretty much been pegged around the world to 3 to 4.5 times income. It varies through suburbs as the income varies. And then all of a sudden it started to get up in these multiples of 10 and 12. And I've been saying for years that housing prices are running at 10 to 12 times household income. And all of a sudden, this is scary. I've been saying that for at least, 12 years. People are starting to agree with me. And I always hate it when people agree with me. It means they've caught up. And Australia is I know there are housing bubbles all over the place. You've got them in west coast of Canada, and absolutely extraordinary some of the prices in Vancouver and elsewhere. And there are parts of the United States that have got massive housing bubbles, but all of a sudden, all of them seem to be starting to deflate. It hasn't really happened in Australia yet, but there have been some interesting comments about the massive overbuilding of home units. We call them, you'd call them apartments in the rest of the world, and there's going to be surpluses of something like 200,000 apartment in the major cities of Australia, Melbourne, Sydney, Brisbane in particular. 200,000 doesn't sound much if you live in a big American city, but scale that to the size of these cities in Australia, it's going to be a real problem. And that's been compounded by the fact that this has happened, as I always say, these things don't happen by accident. This has happened because of government policy. And the Australian government, and I suspect the Canadian government at least, have tried to compensate for the end of the mining booms, the real, Steve Katzler, you'll know all about this, the real big prices for energy commodities and the crash, if you like, in the mining sector, oil and Australia iron ore and coal as well. They've tried to compensate that by creating a further boom in the housing sector. And governments love this because housing's a big employer of labour, and it keeps the unemployment stats way down. And then, so what they've done in this country, and we've seen it in Vancouver as well, is they've allowed overseas people, particularly Chinese, to come in and buy property, residential property. They've excluded that. Governments have said, okay, we're not going to worry about foreign investment control for these sorts of things. We're going to designate whole buildings as okay for foreign buyers. And these people have been coming into, I'm talking about Australia, I know it's exactly the same in Vancouver. Coming here, they've maybe got children going to universities in these countries, and they buy an apartment, and they're really paying a different price. In fact, in Australia, there are two different prices for two different policies. These apartment buildings that are designated as approved for foreign buyers sell at a considerable premium, maybe as much as 20-25%, to comparable buildings that are not approved for foreign buyers. The problem with that now is that banks have seen this coming, and they're starting to tighten up on the lending requirements because, honestly, the old expression, if you could fog a mirror, if you could blow on a mirror and create a fog, you could get a housing loan. That's what's been happening in these countries. And all of these foreign visitors have bought these apartments off the plan. They've just made statements. It's usually done through a broker. They've just made these statements of what their income is, no verification. We've seen this before. This is not a new story, folks. We've seen this in the States, haven't we? They make the statement of their income. It's never verified. Banks have been happy enough to take the punt on it, and they've been lending them 90% and more. They say they've limited to 90. They haven't. They've been lending 100, 105% of these apartment prices in some cases. And of course, now China's cracking down with all of its capital outflows. These people, if they ever had the funds in China, they're having trouble getting them out. And we're going to see a pretty substantial level of default in the settlements on these properties, which were bought 2, 3, and sometimes 4 years ago. That's the sort of time cycle that it expires between when the developers are marketing these properties. They've got nice pictures. They might have models. They'll have a couple of mock-ups. You can go and have a look what some of the rooms are going to look like. All very pristine and beautiful. And yes, you sign the contract. It's going to be built in the next 3 or 4 years, and 2 or 3 years if it's a smaller building. And that's when you'll be required to settle. Prices have gone up massively in that time. Just have a look at the angle on this 2014 into 2015 on this chart. 20% a year in our capital cities, Melbourne and Sydney. Quite extraordinary. And these folks have been terribly happy. They've been sitting on potential capital gain, but it looks like if you're not out of the market now, it may be too late. So this is the start of something that is going to affect economies in many, many parts of the Western world. So watch for it. It's happening. And as I say, this is what causes these things. This is government policy. This is an Australian policy. I know it's not quite as extreme as the States where you can deduct the interest on your own house. You can't do that in Australia. But if you have a second property or third or fourth or fifth, whatever investment property, you can do what's called negatively gear it. That is, you can borrow money and the interest rate and the expenses on those properties become a tax deduction for you against your other income. But have a look at this graph. It only goes up to 2012, and it's only got worse since then. But this is what housing investors are showing is their real net rental income. In fact, so they're not making any money on their asset in a taxable form. That's their income. They're relying totally on capital gain to get the return from their asset, which has been the norm in Australia. You can't do anything wrong here. You buy property, it's only going to go one way. That's up. That's been the historic pattern. Yes, there are some booms and busts, some up and down, but basically it's been an incredible ride, a silly ride, really. And so with the benefit of government policy, investors have been maximizing their gearing on these investment properties so that they're creating significant tax losses. And that means that there's a huge incentive for people to buy second and third properties for investment as a long-term investment to enjoy the capital gain, which there is a capital gains tax, but only they get a big discount on property, unlike other assets. That's causing very high, silly prices. It's also pricing out first home buyers. It's nearly impossible for first home buyers to get into the Australian market now. And this is all going to come to a head in the next 15 or 16 months. So be aware of what's happening with real estate in these bubble economies. It's not everywhere. I mean, it's mainly centered around the capital cities. In the regional areas, in fact, properties are quite depressed. Perth in Western Australia, which is the home of all the big iron ore mines, property prices are down significantly and heading a lot lower. But if you had any idea of the money that they were paying for them, you wouldn't be surprised. So here's our compliance statement, folks. I always like to show you. Trading futures and Forex is risky. If you don't know how to trade, you're probably almost certainly going to lose your money. So I do encourage you to send me an email. Let me know if you're interested in doing the video tutorial, which will be the last of the tutorials for 2016 in any form. and hope we can turn you into profitable, safe, and successful traders. Okay, let's lose that. Type your questions in, folks, if you like, please, because we're not too far from the end. If there's anything you want to ask me, just type it in the questions box, and I'll see it. Let's run an update, folks, on what's happening in our markets. This is the big kahuna in the space on everything at the moment. This is the US dollar index, and we've shown you this chart time and time again, way back since about November, I think it is. Let's see, March 2015. First got into this range in January 2015. This market's been in a complete trading range between about 93 and not getting to 100. And that's a function of Fed policy. This is not happening by accident, but what happens with the US dollar affects almost all markets, very much so the precious metals and commodities, which are largely priced in US dollars. I wanted to quickly see if I can get to show you the difference that's what's happening in these markets on equities. This should be a heads up to you. Let's have a look. This is NASDAQ. I want far more data than that to put it in perspective. This is NASDAQ, as you can see. It's been making new highs. Have a look what's happening. That's the tech sector. The Dow. Here's the Dow. Okay, it's making a big ridge below its high. And have a look what's happening with the Russell. The Russells are well on its way down. It's nothing dramatic yet. It's just hitting off the retracements. It's probably just tracking down through the Danielcode numbers. Here's the major swing, and you can see it's doing its thing. It hit this first Danielcode 1208, immediately reversed, rallied up, came down, tested it again, broken through. It's now heading down. The next number it's heading to is 1180.4. But there's quite a difference that you can see between these equities. And when they're not working together, it's a sign of some problems in these markets. And it's really just the NASDAQ holding the big deals up at the moment. I think we've got some great fun coming. This is the Dow, the DAX, Germany's DAX. You can see it's amazingly strong up there. Okay, let's have a look at our big stuff. These are that was the US dollar index. We need to check on the S&P always. It's our bellwether. Marvino, do I see the euro reaching parity with the dollar, euro dollar? Here it is. Here it is. Here it is. Here it is. Wouldn't think so, Marvino. I mean, euro is a very, very troubled place of the world. And honestly, look, there's more smoke and mirrors goes on with the euro than you can possibly believe. I have no faith in it. I certainly have no faith in European institutions. They're a terribly bloody corrupt lot in my view. Stick with the dollar if you have a choice. It has its ups and downs, but basically, the United States is the only country in the world that really has a vibrant workforce. The rest of us either are socialists or we're being forced by our government to become socialists, which is, pretty much sit on your ass and do as little as possible for most of the population at enormous expense. Don't forget the Australian dollar for many, many years was at parity with the US dollar. In fact, it was higher. It was up to $1.08, $1.10. And in Australia, the minimum hourly rate that you can pay someone is $18.75 an hour. You just have a think what's going to happen to this economy. Oh boy, can you imagine what that would do? You can hear my windows grunting and groaning here, excuse it. You can imagine think about that in America, because it's coming to you. We've got some states over there that have legislated a $15 minimum, and it's scandalous, it's vandalism. And of course, they're pretty close to that in the euro if they're not there already. So, not to say anything about the charting side of it, Marvino. If you really want me to do an analysis on that, shoot me an email, please. It'll take me some time, and I'll have a detailed analysis ready for you, which I can email to you, or I can deal with it at the next webinar. But let's have a look at the SPX and see that here we are. You've seen this chart pretty every time I do a webinar. You get to see this whether you like it or not, folks. But it's vitally important, because don't forget, back here in February of this year, I told you that we'd had the first signal, the second signal actually, of a change of trend, a failure in this market. And I said the probabilities are that we get a big sideways consolidation. And that's been spot on so far. That's what we're getting. But have a look at these levels. You get this break below. Have a look. You can see what happens back here. This is a run down to 2 standard deviations from the mean. What the market tries to do is get back to the mean, which it did here. Then it consolidates along this lower line. That's 1 standard deviation below the mean. Eventually, at a healthy market, will recover the mean and start moving up to 1 standard deviation above the mean. That's not what's happening here. What's happening here is a battle to recover 1 standard deviation below the mean, a failed attempt to get to the mean, or the median if you like, and it's now fighting to hold on to 1 standard deviation below the mean. To me, this is exactly what we thought would happen, but there is potential weakness in this market. Potential weakness. What's Rob saying? He knows this stuff. Fewer and fewer stocks leading it higher, said Quincy Crosby, market strategist at Prudential Financial. Yes, thank you, Rob. And of course, it's a weighted index as well. Yeah. So antenna up, bunny ears up, folks. This can get dramatic anytime. My guess is that the powers that be are moving heaven and earth to get at least past the election without rocking the boat too much. But I think we've got some very interesting times ahead of us. And we love interesting times. Don't forget the beauty of trading futures and spot forex is we get paid exactly the same if the mountain's going down to the market's going up. In fact, we usually get paid a bit quicker. As they say, markets go up by the stairs and down by the escalator or elevator. Yeah, I'm looking forward to that. We always are looking and hoping for volatility, which would be marvelous. So that's about it for the day, folks. Thank you for being with me. Do send me an email, please, jneedham@thedanielcode.com, if you have any questions or anything you would like me to cover at the next webinar, which will be in 2 weeks' time, unless we see some drama unfolding in the markets, in which case I'll put on another webinar at short notice to show you folks where we are and where we're heading. So thank you very much for your attendance, and it's Friday afternoon down under, sun shining. We'll start at summer. Time for the Bloody Marys and the swimming pool, and you folks enjoy your weekend. Bye-bye. David, thank you, David. I sure will, mate. Talk to you soon. Bye-bye.